Hello and welcome to Ask You for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. Stocks in rally mode as investors kick off a holiday-shortened trading week. Alphabet leading the way for big tech, reigniting the AI trade on Wall Street. The Nasdaq posting its best day since May. Also in focus, the rising possibility of a rate cut from the Federal Reserve next month. Plus, the holiday travel countdown is on. Millions of Americans are hitting the roads and skies for Thanksgiving. We've got the roundup on everything you need to know on gas prices and air travel before you pack your bags. Well, we're watching a split in the American consumer this Thanksgiving. Data showing that road travel is weakening sharply. Gas prices are sitting near multi-year lows, but 60% of Americans plan to drive this year. That's down from 72% in 2024. This is coming against the backdrop of what looks to be a record amount of air travel this Thanksgiving. For more, we're bringing in Patrick DeHaan, head of petroleum analysis at GasBuddy. Patrick, always great to see you. So per your data, Patrick, we have what looks to be relatively cheap gas, but you expect fewer people to hit the road this year. What explains that disconnect, Patrick?
Well, Josh, great to be with you. I think some of this is chalked up to a little bit of economic anxiety that a lot of Americans are starting to feel. Now, looking at some of the numbers behind that, keep in mind we're just coming off a record government shutdown, millions of federal workers going without pay for, a month and a half. In addition, kind of some of this economic uncertainty, University of Michigan consumer sentiment for the month of, I believe, October was at its lowest point since 2022. Actually, that was early November data. That's a bit concerning, along with some of the most significant layoffs in a year since 2022. All of that is keeping Americans a little bit on edge, even though 74% of respondents said that gas prices are not impacting their travel this year. I think there's just a tinge of uncertainty that's keeping some of us closer to home.
At the same time, Patrick, we see these reports. U.S. Airlines predicting another record Thanksgiving holiday travel period. Airlines will carry more than 31 million people between Friday and Monday. So people not driving as much, maybe, Patrick, but they are flying. How do you think through that?
Yeah, no, absolutely. I mean, look, airlines have been struggling this year, at least some of them, with filling their planes all the way. And now with this government shutdown ending, it's back wide open. Now, look at some of the numbers already. The TSA predicting record travel. O'Hare, it's certainly one of the nation's largest airports, watching their numbers that just came out for October, continue to point to a very resilient air traveler. Look, I think the world continues to trend towards more mobility, longer travel periods during the year. A lot of airlines have called that out in their earnings that, you're not seeing the traditional pent-up demand for summer now. The summer travel, the travel season is extending. And so part of that could be travelers going to other destinations. Airfare is still relatively low, very affordable. Now with some of the economic uncertainty from the FAA shutdown being behind us, you could see people that have opted for some of those last minute trips. Any way you look at it, circling back here to gas prices, we expect the national average to tie what it was a year ago. Now, it may end up being slightly higher. We go into it today at this moment about 2 cents above last year at this time. So there's still the potential that we're just a little bit above last year. Having said that, another real positive development, 28 states are seeing an average price below $3 a gallon. So there's still plenty of affordable prices out there.
Where are the highest and lowest prices across the country right now, Patrick? What do you see?
Well, certainly behind my shoulder, that map, that color-coded map will show you the hot spots remain on the West Coast. California, Hawaii, Washington State, the three most expensive states when it comes to filling your tank up. And you'll find that a lot of lower prices are in areas that have not only lower gasoline taxes, but proximity to major refineries in areas like Texas, Oklahoma, Louisiana. In fact, amazing to tell you, just earlier today, GasBuddy tracking 4 stations just outside Oklahoma City, falling below the $2 a gallon mark. It's the first time that we've seen what I'll call sustainable sub $2 prices since 2021. We've seen some of the sub $2 prices pop up earlier this year in Colorado. A lot of those are temporary, more like but promotional stunts. These stations in Oklahoma represent sustainable prices below $2. So certainly very exciting. And that's a sign what we could see more of as we get closer to Christmas, I do expect the national average to continue falling here in the weeks ahead.
Falling to what, Patrick? Because that's where you're kind of leading me where I was going. I want to say, okay, gas prices, we got what they are now. What's your early read on where they could be Christmas, New Year's into 2026?
Well, Josh, probably last time we spoke, I was a bit more optimistic that we'd already be seeing a national average below $3 a gallon. Now, it's some of the refinery snags that have developed in the Great Lakes. A refinery fire, the largest refinery in the Midwest, about a month ago. Over on the West Coast, the BP Olympic pipeline being shut down. Refinery challenges in the West Coast have delayed the arrival of the potential for sub $3 a gallon gas. Now, all lights are go. This could happen here over the weekend. The national average flirting with sub $3 prices today at $3.01. I think it may take another week for us to get there. But when it does, we may see most of the rest of the year at or below that $3 a gallon mark, with some of the lowest oil prices today, by the way, in the last 4 years.
Patrick, always great to see you. Happy Thanksgiving.
Thanks, Josh. You too.
A record 31 million Americans are expected to travel over the course of Thanksgiving week. It's according to research from Airlines for America. Comes after a 43-day government shutdown that led to thousands of flight delays and mandatory cuts to flight schedules at 40 major airports. George Ferguson, Bloomberg Intelligence senior aerospace, defense, and airlines industry analyst, joined Market Catalyst this morning to discuss how the recent uncertainty could impact holiday travel and airlines' profits.
As we get into Thanksgiving and the year-end holidays, typically we find customers or flyers, are booking, a lot further out the curve, as we say in the industry. So we're like a typical business flyer might book 14 days out or something like that. What we traditionally find in October, November, December, we're kind of like in the high 50s to low 60s days before travel booking. Again, I think it's a big component of that. The leisure traveler, they want to have their plans set before they go. They're sort of working on fares and things like that. So if you were booking 58 or 62 days out, for December or November travel, you were already booked, I think, before the shutdown. And so I don't think it changed people's plans much.
Yeah, makes sense. And so you think that there won't be much of a sort of material effect on numbers for the airlines?
No, so when we were all done, we took a 14-day window and we cut operations by actually 10% for all U.S. airlines and ran some calculations. We gave a little bit more load factor to the airlines because they're crunching more people on less flights. And essentially, when we were all done, we kind of, even with those numbers, which I think were a bit rich maybe, we really think the airlines probably got 90% of their schedule, flown for the quarter, provided there are no other big interruptions. And that 98% part of the schedule with a little bit more load factor, it impacted some a little bit in profitability and margins. Some it improved profitability and margins. If you were flying regionals like American and maybe you shut down some of your regional business, which is a high cost business, maybe you got some slightly better profit and margins. So when we were all done, we just don't see a really big material change in expected results for 4Q because of the shutdown.
So let's zoom out and talk about holiday just more broadly here, George. As I just mentioned, 31 million travelers are expected to travel this upcoming Thanksgiving holiday. How if we look at holiday overall, what are some indicators we should look for? Not just traffic, but what are some of the trends that we should expect to see?
Yeah, well, I mean, I think the challenge with the holidays is that everything gets channeled pretty tightly, right? And so everybody wants to get home for Thanksgiving, and so they're traveling usually this week, coming home on Sunday. I think Sunday's like the biggest travel day of the year, something like that. And so that's usually really good for fares for airlines. I've been hearing some of the recent trend is, if you can work from home or work from anywhere, maybe is the right way to say it. Maybe you pushed your travel plans into last week so you could find some better fares and such. So my guess is that the airlines, they'll do okay this holiday season, again, because of that channelized effect. But I think what we're seeing is consumers, especially in the economy, basic end of travel, they're looking for deals. They're looking to save money. They feel a bit squeezed by inflation. So So my guess is that maybe fares continue to fall a bit into 4Q compared to 4Q last year because you've got those folks economizing. But if there's not too many interruptions too on the holiday travel season, again, I think we'll see results come in pretty close to what we expected when we started the quarter.
George, this morning I was digging into your survey for 2026, which I thought was really interesting, that the number of people who plan to prioritize vacations is lower than it was, at 29% next year versus 36% a year ago. Did that surprise you? And then what are the implications then for travel?
Yeah, no, I think, again, it goes back to that trend I was just talking to you about, and that is we think in the sort of the basic economy ranks, those travelers are being squeezed by inflation. They're a little concerned about the outlook for the economy. And so some of the lower end sort of travelers are rethinking how important that annual vacation is. And then, by the same token, what we're seeing, or the flip side of that token, is we're seeing that those travelers that are a little bit better to do, they want to spend more on travel. They want a better experience. And this is really the trend we've sort of seen all year. And that is that the premium traveler doing quite well, demanding more out of their experience. The basic economy traveler is not doing as well, economizing, and some of that's pushing fares down.
And that also, I guess, has implications for the discount airlines, that the low-cost airlines might continue to sort of, like, it's been kind of a rough time for them. And is the implication that it will continue to be?
It is, so I think coming out of the pandemic, we probably built too much basic economy, capacity. We, meaning the airlines, they just added too much of that capacity to the marketplace. And so I think we'll have to rationalize that budget travel space. We're starting to see it, right? Spirit Airlines declared bankruptcy again, and we're trying to figure out ultimately, how much of a schedule they're going to fly next year. Some other airlines on the budget area, the travel experience, our financials aren't performing as well. JetBlue would be one of them, Frontier would be one of them. So I think capacity needs to come out of that part of the industry, and we're already starting to see it happen.
Well, stocks closed higher to start the shortened trading week. The Nasdaq seeing its biggest jump since May. Here with the trading day takeaways is Yahoo Finance's Jared Blikre. Jared.
Thank you, Josh. Got to talk about tech roaring back, and we'll start with the Nasdaq. And this is going to be an intraday price chart. Let me just show you the year to date, because in the context of this, we didn't even fall off this much, but you'd think that the sky was falling down. What I'm seeing here is a little bit of an oops, kind of a false breakdown, and this is actually looking pretty good. I'd be surprised if we don't test these highs here. What I have seen, and I just want to address this quickly, here's the 3-month intraday chart, so you can see a lot of more squiggly lines. So here would be the neckline of a potential head and shoulders. And there's only one left shoulder and one head here, and you'd have to draw on this other one. So this would take a while to develop, and then you'd have to break below that. So it's a little bit too premature to call that. What I see here is a false breakdown, and we had some bullish price action in the sectors and some of the Mag 7 and in disruption. There's tech up 2.38% today. But let me show you, Alphabet just rocketing to another record high, Broadcom up 11%, Tesla up 7%, and we're kind of heading into that seasonal time of year when things tend to go the way of the bulls. So there's not a lot of risk this week. We've had some, I went back and I had ChatGPT search throughout history, all the Thanksgiving, Black Fridays where we had some trouble. And there was only 3 this century, 2008, 2014, and I believe 2021. So we're pretty well situated here.
You know what we haven't talked about in a hot minute? The metals, my friend.
Ah, yes. Gold and silver. Mm-hmm. We haven't talked about them because they haven't done much, but they did today. So let's take a look at the futures board here. And, after just kind of in context here, we'll start with silver since that's in the number 1 position. See if we can get a chart up there. There we go. Here's the year to date. And after a run like this, you're going to pull back a little bit. And here we have You can see the price is kind of in between these two big potential support and resistance lines right there. So I'm not going to get too excited until it breaks to the upside. Nevertheless, it was the biggest jump that we've seen in a few days, so it caught my attention. Here is gold, and not a dissimilar looking chart, still at 55% year to date. What this is looking to me is more like a pennant instead of like kind of a rectangular box area. If it breaks above there, got a really good shot at testing that high. If it breaks that high, guess what? I think momentum favors more to the upside. Central banks have been huge buyers, but the marginal buyers, the ones who have been driving this rally all year long, have really been the ETF buyers. So I'd like to see them come back, and they kind of follow price, and we'll have to see. But the speculators have run up this market before, and I don't discount their ability to do that once again.
What about crypto?
Yeah, let's do that. We got that board right here. So here is the big picture in crypto, and Bitcoin only up 1%. Nevertheless, we did some work over the weekend. So if you take a 3-day look, you can see we're up 4%, and those lows, maybe put a 4-day on there. I think that'll capture it. There we go. 4 days, then you can see that $82,000 bottom, and we're up to 88,000. Let's call it 89,000. So 7,000 based on what happened isn't that bad. Here's the year to date, and you can see this thing just kind of falling off a cliff here. I did call for 75,000. If we get to about 90,000, that's where I think the shorts really enter in mass. So 90 to 92 is a potential resistance block there, but I don't think we're in the all clear until we get to 110,000. That's way far above. You get past 110,000, really good shot at getting to those highs again. And speaking of Bitcoin, I got to sit down with Eddie Johnson. He's on Stocks in Translation. He's written a few books about crypto. He's a great friend of the show, knows a lot about crypto and math and technical analysis. Here's what he had to say about this latest Bitcoin slump.
I think that Bitcoin right now is at a point where when you see blood in the streets, even your own, you invest. So I tell people all the time, practice GMB3, do your own research, know your entries and exits, and absolutely invest deliberately. Bitcoin being down at the moment doesn't faze me at all. And some people are kind of like, why doesn't it faze you? And it's because all of the infrastructure for Bitcoin to become a usable, tangible value is already there.
I think that's a pretty good point, that Wall Street has really invested in the infrastructure in Bitcoin, and I'd be extremely surprised if we have this 126,000 high that just lasts for years again, but anything's possible. Also, if you're wondering what he meant about GMB, it's the GMB X Factor, and you'll have to see the episode or listen to it tomorrow morning when it drops. That's going to be Tuesday morning. It goes live.
What else is on your radar?
We got, I'm watching the dollar. It didn't really do much today, but as I was saying late last week, it's kind of at a big critical potential resistance point. If it goes much higher, so this is pretty good over the last 3 months, if it goes to like 101, then we could see some momentum. And right down here, it's just been trading mostly sideways, but here is that 90, I drew that badly. Let's get rid of that. Let's just call it a rounded bottom. And if we break the 101,000 neckline here, then we could probably get some momentum. That would weigh on futures, including gold and silver, crypto, potentially stocks, if it moves very quickly, just because it is kind of a non-consensus trade. That's about it.
Thank you, buddy. Appreciate it. That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market room stories affecting your wallet.